You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Joe Venazzi from OptionFit.com, and Mark the Greasy Meatball Sebastian from OptionFit.com. The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, get ready to hit the Option Block.
All right, everybody. That rockin' tune means it is time to rock out once again with the Option Block. One final time in 2019, one final time for the decade. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting The Options Insider Radio Network. What will we have in store for you guys in 2020? Who knows? Stay tuned. A lot of fun stuff on the horizon. Of course, you guys know how to get us live every Monday and Thursday, noon Central, 1 p.m. Eastern, after the fact, wherever the heck you listen to find our podcast programs. We don't judge. However you like, just get at us. And, of course, get those questions, those comments, those insights, those prognostications that you'll see in a little bit. Keep those coming as well. We do love to hear from you guys. And joining me on the program one final time here for 2019. Let's go back. Let's go back to the hot seat, the active trader hot seat out there in Fidelity Land, where we are joined one last time here for the year by the last dad of Krypton himself, Mr. Trey Jarrell. Mr. Last Dad of Krypton, sir, welcome back to the Option Block one final time for 2019, sir.
Yeah, thanks. Honored to be here on the final show of 2019, and what a fun year it's been for us being on the show, and really looked forward to it, and a fun market here this year as well. So, but as always, glad to be back.
And we are glad to have you. And also joining us, let's see where he is. Is he from Parts Unknown? Is he from the grand palatial offices of St. Charles Wealth Management? Of course, I'm talking about none other than Uncle Mike Tussaw from the appropriately named and located St. Charles Wealth Management. Uncle Mike, welcome back to the program. Whither are you today, sir?
Parts unknown, but on my way back to the office at this point. So parts unknown for now, but St. Charles Wealth Management World Headquarters shortly.
All right, and I do believe, last but not least, we are also joined from the hinterlands of these fine here United States. One last time for the decade. It's appropriate he's on to round out the decade here. He is the rockingest of lobsters, Mr. Andrew Giovinazzi from OptionPit.com by way of a little thing called Carmen Line Capital. Mr. G, are you there, sir? And welcome back one last time for the decade.
Thank you. It's feeling like a large event. I was on my cross country skis and I came back. My big week off. I came back for this show because it is the last show of the decade.
You were on cross country skis when the show started.
Yeah. Well, I thought I thought the Greasy Meatball was doing the show today, so I'm like, okay. And then you call him like, oh, no, gee. So I came back.
That's how much he loves you, listeners. Plus, it's appropriate that it's you, Mr. Rocklapsix. We have some predictions to pay off in a little bit. But first, let's get to it with a little bit of the old trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, let's get to it one last time for the decade, which is actually appropriate for this show because it has been running for the lion's share of that decade. So we get to say that with a little bit of swing and swagger in our step here. How many shows can say that, listeners, let alone options-based shows? I'll give you a hint, none. So when it comes to long-running options content, we're kind of it. All right, let's go back and see what the heck's going on one final time here for today. Then we'll get into some interesting stuff here for the year. Obviously, not a robust end to the year. You know, we're talking about signing ceremonies potentially for the quote-unquote beginning of the end of the trade war and a lot of good news on that front. Yet a lot of that, not enough to lift the markets coming into the end of the year here. We're seeing most of the major indices off about 1/3% down, S&P off that range, and the NASDAQ off a little more, threatening off 0.5%. Gold and crude, in form of WTI at least, getting a nice little lift. WTI threatening 62. It's been a while since we've seen those levels out there. Gold north of that 1,500 level yet again. So both of those getting a slight lift here to round out the year. Our old friend VIX up quite a bit, actually, up to 14.5, which is actually looking a little better, I think, for my prognostication for the end of the year. Our old friend VXX pretty much unched right around close to 100, about 99.75, which puts it at almost exactly unched from our last show. I'm sorry, that was VVIX. VXX is at 1560, which puts it up about a little over half a handle, about 0.6 from this show last year. And we have a lot of interesting nuggets. I'll save those for a little bit, looking back on 2019. But before we do that, let's go back around the horn one last time, see what everyone has on their radar. Let's start in the Fidelity hot seat, sir. What are the Fidelity legions trading out there today? And also, if there are any interesting trades or trends or developments or things you really noted in the options world in 2019 that were on your radar, sir, have at it, Mr. Trey.
Yeah, thank you. And I think Fidelity customers are keeping busy here today. And, the top two names on here, I think, certainly been an interesting theme here over the past few years, to say the least, but which is the electric car makers here. So actually number one here today coming was NIO, N-I-O. And this has popped onto our list, every now and again, but coming in at number one here today with 2,700 buy orders versus 2,500 sell orders. So Fidelity customers a little bit on the bullish side here today. But this morning they released their earnings pre-market. Did have a loss, but that loss was a little narrower than expected. Came in at a loss of $2.38 per share versus expectations of $2.43 per share. But the reaction has been pretty substantial. It's trading right now at $4.80, but that's up $2.30 right now. So just about 100% gain here on this name on today. So certainly an exciting move for this stock. And this is specifically a company that focuses on electric cars here in China. Chart's fairly interesting here as well. This IPO'd, around September of 2018. And in that area for about 6 months, kind of stuck in this range between about $6, had one big spike up to 13, another spike up to 11, but held this $6 support about 4 times before finally breaking through in March. Really sold off that since then, reached almost down to about $1 price level, but since then, which happened in October. Been rebounding. Today's move actually takes it well above the 200-day moving average, which is sitting at $3 here right now. So it'll be interesting to see if this momentum continues. Getting back above that $6 point where it held support for so long might be an interesting range to keep an eye on here. But big day so far. Option market just seems haywire on this today. So this is a name that's 90-day ADV is usually about 88,000. They're trading over 800,000 contracts here right now, with 618,000 coming from the call side and 188,000 on the put side. So interesting stock here. Obviously, a lot of interest in the option market and Fidelity customers here today. Certainly, the electric car theme over the past few years has been interesting to follow as well. So. On that note, we'll take a look at the other one. I know we've talked about this quite a bit on the show here, which is Tesla. Popped up at number 2 on orders by Fidelity customers here. And right now, Fidelity customers also leaning to the buy side. Got about 54% of the orders coming in as buys here today. So again, slightly bullish. Stocky here a bit today, trading at $420.17, down about $10. I think this was the famous price point of Elon Musk's tweet a while back about the rumored buyout. Of course, that never happened. So interesting to see us sitting there. But stock's really been on quite a run here. Broke that 200-day moving average in October, and really just taken off here after that previous earnings report, right? So really did hit those new highs yesterday before coming back. So it'll be an interesting name to follow. See if this trend continues. Even though it's a big down day, still well above all of our moving averages. Still seems to be holding this upward trend here too. There wasn't a ton in the news on Tesla. Really, the only thing that obviously there's going to be some attention to it with NIO. Here today, you did have one analyst that was following Tesla reiterating an underperform rating here too, which could be where some of this bearishness is coming from here on Tesla today. But not option market's pretty steady here, a little bit below the ADV right now, and pretty split right now between calls and puts here also. So I wanted to make mention too, which was number 3 on the list today. Obviously, a company that all followed throughout the year here, which is Apple. Just obviously a tremendous year, up over 80% here on those on the year. But another update here today, trading at $291.51, up $1.71 here today. Right now, not really much in the news here today. Fidelity customers falling in on the buy side here on Apple. I was wondering if we might see some profit taking on this name. Doesn't appear to be so. Sitting at 53% buys on the Fidelity customer side. Obviously a big push up here today as well. It's just slightly below the all-time highs that it hit here yesterday. And option market looking pretty bullish, at least today on Apple as well. You've got about 377,000 calls traded today versus 213,000 puts, with the majority falling on the call buying side here at about 86,000 calls bought to 82,000 calls sold. So this will be very interesting to see. Really, if it can kind of continue this run up here next year, certainly been a strong move there as well. Last one I wanted to mention here today. So, name that I'm sure you're all very familiar with here. Coming in at number 4 is SVRA Incorporated. That's a ticker SVRA. Fidelity customers trading this today. 56% buys on this name here today. So this is a company that got FDA approval here on a therapy drug here today. But trading right now at $3.61, up $1.90 here on the day. And it's kind of interesting, I thought, from a technical standpoint. This actually jumped up today to look like it was going to clear the 200-day moving average, but actually pulled back. So, obviously move is on the drug news fundamental, but seeing that technical level coming into play would be something to keep an eye on here as well. Big option volume here today, trading 2,075 contracts today versus its ADV, which is only 33 contracts. But I thought it was worth a mention here. This name that I'm actually not familiar with, doesn't come up too often, but big move here from it on that drug announcement, and certainly had some interest from Fidelity customers here as well. So, but those were a couple I had on my radar. I thought I'd at least looking at Tesla and Apple, certainly big stories throughout the year. So I see it still being the case with those in our top 5 here today.
Yep, hard to escape Tesla and Apple in 2019. Pick a day that ends in Y. chances are at least one of those two were dominating the tape and also probably dominating the headlines. So good choices there, sir. Let's go back out to Uncle Mike, sir. What is lighting up your tape today? And also, were there any interesting trades or trends or developments or things that stood out to you, sir, in 2019, Mr. Uncle Mike?
Well, in terms of right now, or what's happening in the near-term market, not a lot's going on in that it's just kind of the last couple days of the year. I think that most of the traders or the big money is kind of more concerned with what they're going to do on New Year's Eve tomorrow night than trading right now, and just making sure that nothing too crazy happens. We are getting a little bit of a spike up in the VIX, not spike up, but a little bit of an increase in the VIX. We're at the 14.5 level, so definitely watching that for the time being. But overall, we're near the all-time. We're ending the year near the all-time highs. So for the bulls such as myself, that's always a good thing. Right now, I think now and possibly even the rest of this week, this is going to be an eighth grade dance type of market, meaning that the bulls are on one side of the gym, the bears are on the other, and they're all the music's playing, but they're all kind of staring at each other, waiting for one of them to make the first move. And so I think that when you have a market like this, just be cautious, folks. I have a little bit of long premium on the table right now, but for the most part, I'm tending more to be on the cash side of things for that reason, and then I'll get back in the game one way or another starting next week, most likely. But for right now, not a lot happening. In terms of the trends for this year, I don't care what people think about Trump. I love trading these markets. Something bad, the market trends up. Oh, something bad's going to happen. The China deal's not going to happen till after the election. Market dips. You have the opportunity. It's a buying opportunity oftentimes. And then magically, it looks like things will be a little bit better with the China deal. And then the market goes up. So not trying to be political by any means, but good gosh, this is one fun president to trade. I will say that about it. So that's the main trend that I've noticed for this year. And quite honestly, the last 3 years, the only time that really wasn't the case, at least I don't have any scientific data to back this up, but from everything that I can tell, the only time that really wasn't the case was the last 2 months of last year. And there does come a point to where you got to say no mas, but bottom line is that this has been a lot of fun to trade, to say the least. So that's probably the main trend that I've noticed throughout this past year, and excited about 2020, as I always am, going into a new year.
All right, and last but not least, he who put off skiing come chat with us one final time this year, and indeed this decade. Mr. Rock Lobster, what's resonating with you in this final market for the year, or pretty close, at least for us it is, one more day for the rest of the market. And of course, what resonated for you in 2019, sir?
What resonated with me? What resonated was the bounce back in technology stocks. Just, like a rubber biscuit. I mean, the January-December was a great opportunity. I agree with Tucson. It was a great market to trade. Vol products kind of spent the year, a little more of the year doing what they're more used to doing, kind of going down, although VIX is finishing up a little bit higher. But, it's a lot easier to be bullish when the market is in the dumps than it is here, just because, what makes us keep going from this level? So as far as the year that just happened, I just say, wow, technology really bounced hard. And to me, that was the strongest by far. That was by far the strongest thing that was going on. From vol land, also we had relatively muted volatility ranges. Like we started, January, VIX is pretty high. We're just coming off that crazy new Christmas Eve spike in 2018. But after that, no sell-off held at all the whole year. Nothing. I don't think we got over 25 VIX. So we really just didn't get, and as the Thompson boys say, VIX strategies pay over 20 and under 16. And we did get a lot of under 16, but man, it was hard to take any profits on the upside this year. At least for my trading, that definitely hurt my vol trading a little bit. I made a little money, but not any great money, just because nothing really blew up enough really for me to make like the big dollars that I would have liked. But besides that, the long part of, the long stocks and just being long in general, it was the thing to be. And people were naysaying it the whole time, but you missed a pretty good rally if you weren't there. That's all I'm going to say.
Yes, that is the case. Yeah, it's easy to argue against the irrationality of this market. It's also hard to argue against the numbers that are being put up there. So the old saying, the market can stay irrational longer than you can stay solid, or in this case, maybe then you can miss out on some upside. So Uncle Mike in cash, maybe that's a bit of a warning sign for you out there, all you Perma Bulls out there, but still a lot to chew on as we draw to a close here for the year and indeed for the decade. Since we're talking about wrapping up the year, let's look at a few nuggets of what was going on here. Back a year ago when we were doing our great 2018 year in review show, what a difference a year makes. Last year, we were pretty much just coming off of the heels of what I've called pretty much throughout the entirety of this year, the Great Nadir, which was Christmas Eve. We saw that huge sell-off out there. Uncle Mike called it today. What did he term it? He termed an eighth grade dance market. Like a year ago, he called it a market for crazy people. Because indeed it was. We were seeing huge moves out there. The Dow had just rallied 1,000 points a few sessions before our final show of the year. That last show of the year actually was another huge sell-off day. The S&P, the NASDAQ, and Dow were both off a little bit north of 2% as of the time we were recording the show. So things were rocking and rolling. Get this, listeners, it seems like a distant memory now, but VIX itself was over 32 as we were recording our final show. What a difference a year makes. VXX, the one that everyone and their mother is wagering successfully this year, is going to be shy of the 20 handle. It was not only was it north of 20, it wasn't north of 30, it was north of 40, it was over 50 as of our last show last year. It broke a lot of hearts. Also, it was still called VXXB. Thank God we did away with that early in 2019. At the time, a year ago, Apple and Microsoft were still well south of the $1 trillion market cap. They're both around 770 or so billion. Amazon, a paltry 693 billion. They weren't even looking at 700 billion, let alone closing in on $1 trillion or anything else like that. Some other nuggets in terms of volume. Of course, 2018 was a record year. Over 5 billion contracts traded in 2018, just a little bit north of 5 billion contracts, like 5.25 billion total contracts were cleared in 2018 at OCC. Remember, they do more than just options; they do stock loan and other things, futures. So we didn't quite hit that volume level this year in 2019. Looking at the numbers for November, the OCC year to date at the end of November was about 19.7 million. That's ADV. Listen, that's not total, obviously. That's ADV. So that was down nearly 5%. That's compared to 2018's level. And looking at the numbers as of right now, here through not quite done with December, but pretty close. Looks like we got a decent December on the book so far. About 433 million contracts have traded so far. So decent, more than November, but not quite enough to do it. And also year to date, we're looking at an ADV of a little bit less, actually, around 19.5 million. And so not gonna break it from a year to date ADV or a total, actually. Total volume, we're at about 4.6 billion contracts, so not going to threaten that 5 billion level. And, of course, that's total contracts. So we were at 5.25 billion total contracts in 2018, which is something, as you recall, I said at the beginning of this year. I said we probably weren't going to threaten those record levels of 2018 again, because remember what it took to get there in 2018. That was pretty difficult stuff. We had to have a Feb VIXocalypse. We had to have a big sell-off with Warm turning pretty hard in October, and then the Great Nadir of Christmas Eve. All of that had to, plus obviously some trade war headlines scattered through there and a few other things to really have to drive those ridiculous volume levels. So maybe a good thing that we didn't see a repeat of some of those events in the marketplace. Speaking of the marketplace, let's look what's lighting it up here one final time here for the year and indeed for the decade today. Not a huge action day. VIX a little bit shy of 200K, about $1.75 or so. The ADV has come off about 100,000. Two-member was threatening 500K to the upside, about 500,000. Now it's about 400K SPY coming in, threatening 2 million. The ADV about 2.5 million. So SPY actually doing a little bit of decent paper today. The S, a similar story, closing in on 750,000 contracts. The ADV got about 1.2 million right now. The Qs, 363,000. The ADV threatening about 500,000, 477,000 out there. So not quite there yet. And the Russell, aka IWM, at about 193. The ADV about 280. Let's look at what's lighting it up from an individual underlying perspective. I'm going to crunch some numbers. We haven't had a chance to crunch those yet. We only have the totals for Apple right now, so I want to get a look back maybe in early 2020, which sounds so futuristic to say 2020 listeners, but we're almost there. Looking back at 2019 with some total volume numbers for individual underlyings like Apple and Tesla and everything else for the year. Right now it looks like Apple is closing in at about 265 million contracts, a little bit north of that right now. About almost 60% of it coming on the call side for 2019. But we'll have the final official numbers and some other underlyings you guys like to trade as well coming up early in the new year. Let's look at the most actives here one last time for 2019. Number 10 is good old AT&T, a.k.a. Telephone. 74,000. That's all it cost you to break into the top 10 here. Again, kind of a light day. Number 9, Baba, 78,000. Number 8, Roku, the gift that keeps on giving. Got a Roku TV for Christmas here. So I was playing around with Roku for the first time myself, seeing what all the fuss is about out there. Number 8, Roku, 110,000. Number 7, Microsoft, 131,000 contracts. Number 6, Facebook, closing in on $1.50. Number 5, Amazon, $1.70 out there. Got some stalwarts here to round out the year. Number 4, AMD, of course. Can't have a top 10 without Roku and AMD these days. AMD, 192. Number 3, Tesla. Making some headlines out there. In China also, I believe, maybe a downgrade going on out there as well. So the stock moving yet again. A day that ends in Y. Tesla's moving. Putting up 234,000 contracts right now. Number 2, Apple, 586. So a strong day for Apple. But you know it's a crazy day when Apple putting up nearly 600,000 contracts. Yet that's not enough to take the top spot. It is, as the last data Krypton mentioned, NIO. They of Chinese electric car fame / infamy. Threatening 800,000 contracts, 783 as of a few minutes ago. So a lot of paper out there. Chinese electric cars are dominating the tape today. Looking at biases really quickly, we've got, looks like NIO is the lead in the charts in terms of biased paper as well. 77% of that nearly 800K coming on the call side of the ledger. A few other nuggets to break down here as we're looking back on 2019. If you're wondering, just broad equities, looks like Apple and AMD, two of the big winners out there. If you're looking at different indices, taking the top of each, top Dow name was Apple up. How crazy is that to say? Nearly 84%. A huge $1 trillion company managing to nearly double in 2019. That, if you had told me that at the beginning of the year, I would have said you were a crazy person. And yet, here we stand at the end of the year. And AMD leading the list pretty much for the S&P. And if it was in the Dow, it would blow the doors off there as well, up 150% this year. Some other names, Microsoft up 56.5% this year. Lam Research Corporation, everyone's favorite, up 115%. Chipotle, a.k.a. the formerly stealth Apple, up nearly 94%. AMAT up 86, nearly 87%. Disney up about 33%. Nike up 37%. All sorts of fun stuff. JP Morgan up about 42.5%. Obviously, not a lot of earnings lighting up the tape here as we keep on rolling. I want to look back on the year as well and look ahead, get some of your predictions. We'll also get some of you guys on the show with some of your comments. So let's do a real quick, because I want to pay off some of our odd block madness as well. Let's do a real quick odd block review.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, welcome to the Odd Block one final time for 2019, and indeed for the decade. It's not going to get old to say that throughout the show. And looking here, Mr. Rock Lobster, I hope you put on your review pants, because we want to dig out some of this to-be-watched category that we've just filled up. We've been filling up that bucket for pretty much all of 2019. Let's pay it off one last time here with one name that was pretty sizable that we talked about not too long ago. This is our old friend Sprint, a.k.a. S. And this trade we're talking about here came from November 7th of this year, so not too long ago, not quite 2 months, but closing in on it there. And looks like at the time we profiled someone loving themselves some calls, some mega call love, as we termed it on the show back then. In Sprint at the time, we profiled 34,800 of the D7 calls. Maybe before we get into that, let's do a quick rundown again of where Sprint has been. Right now, Sprint's at about 5.25, so it's up slightly on the day, bucking the trend of sell-offs out there. So a cheapy name, to say the least. A year ago, it was a little bit north of that, trading $6. It hit its high of the year. Obviously, there's been a lot of M&A activity and corporate activity rumors swirling around Sprint for a while, and they hit their high of the year at about $8, $8.06 actually. That was back in late July, and then it kind of sold off again to where they are right now, back in the nadir of pretty much at their 52-week low. They're 5.15 is their 52-week low, and they're at about 5.25 right now. So pretty much at the bottom end of that range, $8 on the high, and about 5.25 or so on the downside there. So there we are, low end of this range. What do we see in November? We saw someone thinking maybe the worm was about to turn and do so for size out here in Sprint. There were the D7s lighting up the tape. These things were 13 cents at 18 when this trade went up 34,800 times, taking over that offer, just devouring it for 18 cents. Again, this obviously was opening paper. A total of a little over 40,000. Now, the ADV in Sprint alone is only 20,000 contracts. That's total for the day. So this trade alone was doing about 2x that in just one print. So pretty aggressive. And then if you looked at the how much these things actually traded, someone really liked these things. Because we talked on that day, the 7th, nearly 50,000 went up on that day. About 49,000 went up on the 7th. And then more traded again on small numbers, 13th and 18th of November. But then on the 3rd of December, 26,000 more went up, and pretty much all of that was additive to the OI. And then on the 2nd of December as well, 55,000 more traded, and that was pretty much all additive as well. So by the time after those last big print on the 3rd of December, nearly a month after these, there was about 135,000 of these bad boys on this strike open here. So size OI, size print here. Someone was really looking for a big upside move in December for Sprint. And I told you where we are right now. It doesn't really bode well for it. At the day the stock, the first print we talked about, November 7th, the stock was close actually to that 7 handle. It was about 619. That's where it closed on the 7th. And on expiration, guess where the stock was, listeners? 539. So didn't quite make it. Not surprisingly, this entirety of this OI, 135,000 contracts, was still open on expiration. So we do some quick back of the napkin math here. Looks like he dropped about 625,000 or so on that initial just block. And then if you look at just the total volume on that day, nearly 50,000, he dropped nearly $1 million there. And on the other prints, which looks like obviously they came later, so the options were cheaper. They weren't 18 cents. They were about 12 cents is where he kind of averaged in. He lost another nearly 700K and about 300K. So you're talking about another $1 million. So that puts his total hemorrhaging on this Mr. Rock Lobster at somewhere around the 2 million level, factoring in, assuming it's the same guy doing all this OI, which it probably is. So interesting stuff out here. Mr. Rock Lobster, I'm sure this is a lesson you probably teach your students too, where if you liked him at 18, you got to love him at 12 cents, right? And if you liked him for, about 50,000 contracts at 18, you got to pick up another, looks like 75, 80,000 at 12 cents. Isn't that what you teach your students over there in Rock Lobster land, a.k.a. the land of the pit, sir?
I'm going to have to say, no. The problem with options are different, right? Options are hot dates. They're not marriages. So you can get away with, like stepping into stock, but the problem with long calls is, you got a finite date. You can be short-term wrong and long-term right with stock. It's very hard to do that with options. So the doubling down thing is not my favorite strategy in an equity and a junkie out of the money option. So, people try it all the time, and if it works great. But if it doesn't work, you just lose all your premium. So I don't think that would be a sanctioned two-saw strategy either. Just keep loading up on the options as they go out worthless. I guess I would much rather prefer at least the stock going in my direction, but apparently that was not the case for this one. Not the case for spreads.
Not the case, indeed. So there you go, listeners. You're not the only ones who can keep piling into a trade when it moves against you. And this time looks like this guy, obviously we don't know everything he was up to. He could have been massively short and just trying to hedge, in which case hopefully his short made up for the $2 million that he spent on his hedge. I don't think so, but I'm trying to be charitable here to round out the year. But still looks like our friend here was in for a penny, in for a pound. I like that, by the way, Mr. Rock Lobster. Options are hot dates, not marriages. I like that analogy. I may have to borrow that on occasion. As we keep on rolling, we got to get to our prediction payoffs as well. But I'm going to get a few of you on the show here really quickly. So we'll get a little bit of the old final mail block of 2019 and indeed of the decade.
It's time to take your seat on the All-Star Panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, welcome to the Mail Block. Let's get right to it. Looks like, and I like my live listeners, Gabe, easy for me to say, Gabe Rich listening live. He just chimed in. He says we're doing our 2019 year in review show. He just wanted to say, great job, guys. Well, thank you, Gabe. Great job listening to you as well, and to everyone out there who listens and chimes in and makes this show such a fun one to do. We've been doing it forever. Going to keep doing it pretty much forever, just because you guys love it. And we have fun doing it, obviously, as well. It's fun for everyone out there. Let's see. Here's an interesting one. Since we have your brokerage perspective on the show here, Mr. Last Data Krypton, let's get to this one. This comes from Perillo. Kind of a straightforward one, yet also not an area people ask a lot because it's not the sexiest of things, but once they start trading, it becomes pretty sexy, pretty darn quick. This is Mr. Perillo. He wants to know, how do they calculate the margin requirements for short options positions? If I do a spread versus outright, do they take the width of the spread into consideration? Let's say I sell a 30-29 put spread versus a $30/$1 put spread. A little bit wider. So he's saying a $30 versus a 29 strike put spread versus a 30 strike versus a $1 strike put spread, listeners. He says one has much more chance of expiring into stock than the other. Mr. Last Data Krypton, you're our broker guy over here on the show. Obviously, every broker does this a little bit differently in terms of how they do that voodoo behind the scenes to calculate your margin, your buying power, and everything else. But there are some standard rules of thumb we can apply across the board. So let's get the Fidelity perspective. How do you guys calculate your margin requirements for short options positions? And also, if someone's doing a spread, how does that factor into the calculation, sir?
Yeah, absolutely. So as you mentioned, everyone does it a little bit differently here. And kind of the basics of it here, and I'll kind of always caveat there may be some differences here on any given trade, depending on how much of your entire account you're putting in a given position. The particulars of that security, right? So certain securities that may be a little more volatile than others may carry additional requirements. But, for short options, it's usually about 25% here that we're going to hold back for margin. Here at Fidelity, we do have a margin calculator that will actually add any of the additional components that may come into it. So it's always something I recommend if you're going to be putting on a short option trade. Run it through the calculator because it will look at your specific account and come back with that. But it's a general rule. We start with about that 25%. But doing spreads makes a huge difference. Spreads are very easy to calculate. What we're going to be holding you for the requirement is the amount of risk that you're actually putting on. So the example where you have the 30-29, you've got a $1 offset. That $1 minus the premium you bring in is going to be the only requirement that we're holding back on that one, right? The 30-1 put spread, you've got a 29-point offset, so we're holding aside 29 points on that one, of course, minus the premium that you bring in here as well. So thinking about your offsets is going to be not, and also obviously important from a risk standpoint, but could come into play with margin requirements too. If you're doing spreads, right, it's going to not only have that kind of management, risk management built in, but also, may help you reduce some of those requirements here as well. So hopefully that helps out, Pearl. I'll just add to, if you are trading at Fidelity, check out the margin calculator. You can always put a bunch of those in to look for any additional requirements here as well.
There you go. Get the answers to the dark voodoo of margin, because sometimes it can seem like that, listeners. And they have a calculator for you over there if you're a Fidelity client. Kick the tires over there. Fidelity.com/options. Sign in, log in, sign up. And then, of course, you can play along with the margin calculator all day long till your heart's content. Let's end on some fun happiness here. Let's go with this chiming in from Jello. Let's go with Jello. I like Jello. Jello says, Merry Christmas to the Option Block All-Stars. You guys are the best. Also glad that Fidelity joined the show in 2019. Great year, and here's to an even better 2020. Well, thank you very much, Jello. We echo those sentiments back out to you and to everyone else, obviously, who's been listening to the show. Happy holidays to all of you guys. No, you guys are the best. You may think we're the best, but you guys really are the best out there. Yeah, we're glad to have the last Data Krypton and all of his ilk on the show here as well. And we're all looking forward to an even better 2020 as well. And speaking of looking forward, let's do that right now with some predictions as well as some payoffs of predictions as we get into not quite an around the block, but our 2020 prediction block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block, doing things a little bit differently to close out the year and indeed the decade. As we like to do this time of year, we're paying off a little bit of what we said the year before and also trying to look ahead a little bit into the new year, see what the heck is going on. I remember when we did this last year, markets were in turmoil. We had just sold off and then rallied 1,000 points in the Dow, and then the S&P that day was off 2+%, 2.5%, I think, somewhere in that range. VIX was over 30, VXX was over 50. We're in a little bit different environment at the time of that. So that said, let's look at our predictions for this year. Let's start with Uncle Mike. Uncle Mike, he predicted last year a quiet end to the year. He thought VIX cash would get down to the single digits to end the year. He said 9.72 on the VIX cash to close out 2019. Not quite there yet. We seemed like we were threatening that for a little bit. It seemed like he was on the right track. And that's what makes doing this such a difficult task, listeners, because we seemed like we were threatening to break it. We were definitely in the low teens, maybe threatening a single digits. Alas, it did not come to pass for Uncle Mike. We're at about a 14.5 right now. It's looking a little bit better for me and for the Rock Lobster. Spoiler, where we were. Uncle Mike's things to watch for 2019 at the end of last year were, he mentioned, maybe you want to think about buying that dip in the S&P. At the time, the S&P had sold off. It was at 290 and SPY. Then it was at 240 at the time of that show. So he thought maybe buying that dip might be a decent thing, as well as he was in the hunt for a bit of a deal in the trade war. Looks like we got that almost a year later. So, Mr. Uncle Mike, how are you feeling about your 2019 predictions first? And then B, do you have any 2020 predictions in the chamber for us this year, sir?
Well, I think that the 9.72 definitely was VIX bearish, if you will. So we didn't quite get to that level, but we did make a run at it. So feeling okay about that one, but that's why I saved the VIX trading for the experts over at the Option Pit and Carmen Line. But definitely feeling good about that, and of course feeling very good about suggesting to potentially buy the dip as well. In terms of some things to look for next year, this has been a very event-driven market over the last 3 years within this presidency. So the fact that we have an election coming up next year, I believe that I think China is going to we are going to get some type of a China deal of some sort. And I will hold to my consistent prediction that Fox News will say it's a great deal. CNN's going to say it's a horrible deal and the president sold us out. So that's going to happen. But the thing that I'm predicting that I think we're going to see a lot of next year is going to be more event-driven trading opportunities, even more so than the last 3 years, because we're going to have if one Democrat takes the lead who the market thinks could have a chance at beating Trump, then something could happen. Then Trump will tweet something. And I think we're going to have a lot of that next year. So that's probably my main prediction for next year, is that we're going to have a lot of macro political events.
Going out on a limb there with that one. Do you have a VIX to end the year as well, or no?
Why not? Let's go with 10.41.
Oddly precise, as usual, sir. Interesting. So getting a little bit of seasonality to the downside again. You know, if history is your guide, then that's not a bad guess. Of course, recent history, not so much. But if long-term history in the vol space, a little bit of a quiet end of the year. Because that's really what you're predicting, right, listeners? It's not just the entirety of the year. It's really where December is coming in. And that's the great rub. Some listeners did point that out, maybe do an average as well. So we did that. We'll get to that maybe on vol views as well. That's our more vol-centric show. Let's go out here as well. Let's go move on to the Rock Lobster. What did he predict for 2019? Well, his VIX prediction was looking not that great until recently, this past week. Now it's looking a lot better. I'm in that same camp, Mr. Rock Lobster, so don't feel bad. I've been unerringly precise on my weekly predictions on vol views this year, but 1 year out, a little bit of a challenging beast. You were at a 1601 to end the year, Mr. Rock Lobster, and so we're at about a 14.5 right now, 14.55. Not bad, within a point and a half. For a year, I'll give you that one. It's not bad. Rock Lobster, of course, we have a day to go. We could see the vol come in dramatically, and we all look like chumps again, and Uncle Mike seems like the genius in hindsight. Things to watch out for 2019. You said we were at historically high vol to start the year, which we, of course, were. I said VIX was over 30, VXX over 50. He said that vol would not be around in about 3 months. Not exactly the boldest of predictions, but you did make it, and it did come to pass. You said also that people should take a longer-term view to your vol trading. You were leaning towards being a buyer of options premium in the long term at that time going into the start of 2019. So what do you have to say, sir, first off, on your predictions from last year, and then B, do you have any predictions for 2020, sir?
I think my 2019 stuff was pretty good. You know, how do you trade the market when we had just everything gotten slammed? Like, that's the perfect time to buy options. You don't want to invest in stocks per se. You don't want to spend money in stocks, but you could use all the leverage for options. So I mean, there were so many massive moves. So anyway, I thought that worked out overall pretty good. For 2019 or 2020 coming up, I think the election is going to loom large. You know, we rally maybe a little bit here and there. There will be probably a pop on some China deal, but I think that will be that will sort of be the news. Right now, we've been buying the rumor up till then. At least that's what VIX is saying right now, right? Because VIX it's been expanding since expiration. If anybody's been watching, I think settled 11.99, and that was the low tick for it pretty much. And VIX has been expanding as the market's been going up. So they're still pricing like a larger move because they're trying to expand that 30-day straddle. Basically, they're trying to keep the premium in it. So I would say as far as this year goes, I think it's the year for like oil. That's my personal. It's that whole sector. I think the climate crisis has been whatever you think about the climate, that just the bad press has just really weighed on the oil industry. And it's with market all-time highs. There's a lot of those stocks are still in the basement. So I think that would be a place to look for 2020. It's hard to imagine how much farther tech can run, but there's always earnings, right? So if the earnings growth continues, tech can still rally. So it feels like we've kind of got a lot of tech. We look for somewhere else, and I think the market's going to be a little bit jaggy and wishy-washy until the election because, I can only imagine what the rhetoric's going to be like in October or September. So, and that generally, if you look at the last couple election cycles, that vol trade did play out. So, look for volatility to rise in the election like early October. So I think there could be some, short vol trading opportunities between now and then. But The vol probably keeps a bid until election day. I would say from the beginning of October all the way through. So, and that's what I look at this year. It feels like we've kind of had the big rally.
Do you have your end of year prognostication?
Oh, for VIX, I'm going to say, I'll say 12, because, we'll just had the election, new thing coming in. I'm just assuming that the same guy wins right now because that's what the betting line is predicting. I'm going to say 11.99.
11.99. Again, not a exactly seasonally irrational type prognostication. You could tell last year, Mr. Rocklapser, you and I were both feeling both a little bit more vol because we were in a very volatile time when we made that prediction, but also we were coming on the heels of a volatile December, and so I think we both were thinking that we were going to buck the trend a little bit towards the end of the year and make that seasonality not quite what you usually anticipate in December. Usually, again, a quiet time. The last couple of years, not so much. I think we were both banking on that. You were at a 16, so you were north of where I was a little bit north of that. I was at 17.1 in the VIX. We also predicted our averages for the year for VIX as a listener requested. We'll get to those, I think, on vol views. We'll save that for there. So Mr. Rocklaps and I were both feeling a little bit more low. 2.5 handles away. That's not too bad given the fact of where we were a few weeks ago. So a little bit of the worm turning. It's kind of what I was feeling out here. By the way, lest you mock, lest you think this is easy, we put it out to you guys as well. We said, hey, what are you guys feeling? We made it easier for you guys. We gave you zones. We gave you whole ranges to guess. So this time last year when VIX was around 30, we asked you, hey, what are you feeling? Dust off your crystal ball. What are you feeling for the end of the year? Obviously, the year's not over yet, but pretty close. What are you feeling for the end of the year in ye old VIX cash? Gave you the ranges of 8 to 11.99, the low side. Only 1.8% of you picked that. Normal range, which is about 12 to nearly 17, 16.99. 28.8% of you picked that. Elevated, so that's where I was living, and Mr. Rocklobster was pretty close to it. He was 17 to 23 range. That was about almost a third, 32.4% of you. And the winner, with about 36.9% of you, choosing very elevated, so north of 23 to end the year. So nana boo boo to you. It is a challenging beast, is it not, listeners, when we have to pick out for a year. So if you add up all of our audience, you got pretty much 2/3 of them on the north of 17 handle, and only about a third, less than that, 28, not even 29%, picking that 12 to 17 range, which is pretty much where VIX hung out for the lion's share of the year. If you listened to our Advisors Option show, of course, I kind of predicted a somewhat similar play out to the year from a vol perspective here for next year. I think I'm going to save my overall prediction of where we are for VIX cash for vol views as well, so we have some fun nuggets to play with. I'll get Meatball a chance to play along as well on that show, as well as maybe the T3 and the MyAx folks and everybody else out there. But of course, we can't wrap it up without going back to the active trader hot seat one final time. Mr. Last Dad of Krypton, sir, what are you watching in the markets right now? And also, what are you keeping an eye on? What are some of the trends or interesting things? And if you want to go out on a limb and make a bold prediction for 2020, you can have at it, sir. The floor is yours, sir. One final time for the decade.
All right, thanks. Well, yeah, certainly as both the other guys mentioned here today, right? Election, is going to be looming large here this year, so we'll be paying attention to that. Always remind everyone, too, when you come up to an election, we tend to get a ton of calls on the strategy desk if so-and-so is elected or if so-and-so is not elected, market's going to zero. Remember, there's usually can be a little bit of shock. There's a little bit of vol, but, things ultimately do calm down. So, always remember price is what pays. So kind of keep that in your head as you go through the year. I'm sure there'll be plenty of news coverage out there here as well. Throughout the year, also looking forward to 2020, going to be keeping an eye on that Russell. I thought that was kind of an interesting story here this year. We watched multiple times at trying to break out of this resistance level that it's held here through most of the year, all while we're seeing the S&P continue to hit new highs. Russell finally breaking through, but still not near its all-time highs just yet, around that 1740. So see if we get some carry through there. I think it'll be a quiet year from the Fed standpoint. All the Fed futures watch seem to be expecting that's not going to be a big play this year. Obviously, things can change quickly here, but we had a lot of that commentary coming into play with us last year. We'll see if how that plays out this year. But so far, expectations being fairly muted. The other thing I'll be paying attention to just keeping an eye on the sector rotation. This year, kind of a big thing is watching business cycles starting to show signs of going from that mid phase to late phase, and with that you'd expect to see some sector rotation here too. Your healthcare, utilities, materials starting to overperform, but where we're sitting at the end of the year here, as Andrew pointed out, information technology, leading the way here again. So you're not really seeing that rotation. Look like there's a couple of times throughout the year that it might be taking place, but didn't finish up that way. So I think that'll be an interesting theme to pay attention to, see if markets continue to stay risk on here as well. Last thing on the S&P here too, keep my markets trend. We're definitely in an upward trend right now. Use charts, use technical analysis to your advantage. Throughout this year, that 200-day moving average, that long-term moving average has been, a pretty important level. Markets touched it a few times, it really failed to break through. Giving us that evidence that uptrend is going to continue here. Have something in mind if you're, anticipating that fall. You don't want to jump too early. Wait till you see the evidence. Wait till the chart begins to show it. Whichever indicators you use for that. We all have our different style, different time frames. But have something in place to help you with judging that. You don't want to, rely too much on, just the news headlines and get bogged down with those. This is a perfect market to talk about that, right? A very hated bull market, but at the end of the year, right, would have been a great year for being long. But those are a couple of things I had, on my, kind of on my radar that I'll be paying attention to throughout the year.
Thank you for that, Mr. Last Data Krypton. That music means we've come to the end of another epic sojourn through the year and indeed the decade that was the option block. But before we go, let's go back around the horn with each of our cohorts. Let's start one last time with the Last Data Krypton, sir. If folks want to learn more about what's going on in Fidelity Land, where should they go? What should they do? One final time for 2019. And also, if you want to go out on a limb and get dangerous with the rest of us on a little bit of a VIX prediction for the end of next year, sir, have at it. The floor is yours.
All right, thanks. Well, head over to fidelity.com/options to learn more about our trading platform, our trading offering here as well. Also, check out our learning center that we have available. You can find a number of classroom sessions that our strategy desk team does here at Fidelity. So a lot of great ways for you to continue your education here throughout 2020. You can also give Fidelity a call. As for the trading strategy desk, we'd love to help you out. In terms of the VIX prediction, I don't know. I do like the idea of doing the average here, but I'll be boring and just stick with kind of a normal range here. I think things obviously may calm down a little after the election. Hard to call out at this point, but I'll put in a 12 even here for 2020.
12 even for the Last Data Krypton. You heard him one last time here in 2019. You want to kick the tires and light the fires over there in Fidelity Land. Fidelity.com/options is the place to go. And the rockingest of lobsters was once again getting mad at me, saying I purloined his vol zones. I named your zones, sir, so I get to do with them what I will. But in addition to all of your umbrage, if folks want to check out what you guys have cooking in the new year for volatility, where should they go? What should they do, sir?
Well, if I survive our duel to the death using Star Wars blasters, which I now am taking you for a duel.
If we're going to do Star Wars duel, it's got to be lightsabers, right? We got to do it the right way.
Taking my zones, that's all right. I guess, if you can't invent them yourself, you might as well just borrow them. Come to optionpit.com, learn how to trade options, learn how to trade vol, learn how to buy and sell options, all that kind of stuff. We're doing a little revamp. I'm sure Mark will be announcing it pretty soon. But come and check us out, optionpit.com for the new year.
I do believe he took umbrage at my zones last year as well when we did our predictions. It's funny how great minds, or at least one great mind, and then, of course, you, Mr. Rocklester, tend to come down around the same levels when you're looking at overall volatility analysis. Funny how decades of exposure to the volatility space will just do that to someone. And last but not least, I think he's back in Parts Unknown. If you want to reach out to him, whether he's at Parts Unknown or whether he's in the old St. Charles mainstay, Uncle Mike, sir, where should they go? What should they do?
Go to stcharleswealth.com as I sit here from the world headquarters of St. Charles Wealth Management, sitting at my desk. I think back on the year, and it's been a lot of fun. Still have room for more clients, though, as always, but would be more than happy to have a conversation with anybody on the planet. Feel free to go to my website to find out more information on how you can get in touch with me.
All right, hit him up, Fidelity.com. Well, Fidelity.com would be Fidelity. StCharlesWealth.com is the place to go to hit up Uncle Mike. And on behalf of Uncle Mike and the Rock Lobster and Trey and, of course, the Last Emperor and, indeed, of course, the Song of Ice and Fire and all, Brian, everybody who joined us in the Fidelity hot seat in the course of 2019, thanks to all of them as well. And, of course, thanks to you guys. Without you guys, this show is a whole bunch of nothing. So thanks to all of you for joining us here for the year and, indeed, for the lion's share of the decade. You guys rock. We love you. We'll be back, don't worry. We'll be back next year, next decade, into the deep future of 2020 with more volatility and options goodness in store for you. So we'll see you then in the new year for the Option Block.
The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.